Today, Fidelity joins the rush to launch a spot Bitcoin ETF. Coinbase slams the SEC once again, claiming the agency has no authority over the tokens on its exchange. And Rich Rines, a contributor at CoreDAO, breaks down the impact of institutional interest in crypto on the Bitcoin network. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. The digital currency market is holding steady this morning, with Bitcoin trading at around $30,400 and Ether hovering at about $1,850. Meanwhile, Solana jumped by more than 8%. Okay, let's talk about the top stories. First up, Binance is losing a banking partner in Europe. PaySafe Payment Solutions, which handles customers' bank transfers in the region, said that it will wind down its partnership with the crypto exchange on September 25th. Now, Binance spokesperson told us that after that date, customers will have to update their banking details and accept new terms, but that for right now, services on Binance.com are not affected. At the same time, Germany's finance regulator reportedly denied Binance a crypto custody license. That's according to German news outlet Finance Forward. A Binance spokesperson told us that regulatory talks in Germany are an ongoing process, and the exchange will continue its work to meet the regulator's requirements. Next up, Coinbase just filed a response to the SEC's lawsuit claiming the exchange lists unregistered securities. In the statement, Coinbase sought the dismissal of the lawsuit, and it argued that the SEC has no authority over the assets trading on its secondary markets platform because they're not, quote, investment contracts and therefore not securities. The exchange also says the tokens on its platform don't meet the Howey test, the standard used to determine whether assets are securities, because the value of those tokens comes from trading them, not the issuers and businesses that made them. Coinbase also says issuers don't owe any obligations to investors on Coinbase's secondary markets. Last, Fidelity is joining the rush of companies trying to launch a spot Bitcoin ETF. The asset management giant just filed the proposal with the SEC on Thursday, and it comes about 2 weeks after BlackRock filed its own proposal for a spot Bitcoin fund. WisdomTree, VanEck, and Invesco followed suit and sent over their own proposals in the days after. The SEC has been skeptical of a spot Bitcoin ETF, including from Fidelity. It rejected a previous proposal from the investment firm, citing concerns of market manipulation. All right, on to our main story. We've seen a wave of institutions showing signs of confidence in crypto, with several financial giants filing for spot Bitcoin ETFs this month. Crypto World's Talia Kaplan spoke with Rich Rines, a contributor at CoreDAO, a new Layer 1 blockchain powered by Bitcoin, to find out what the developments mean for the Bitcoin network.
In a sign that investors are growing bullish about the prospect of major institutional names getting involved in crypto, the price of Bitcoin jumped above $30,000 and even crossed the $31,000 level recently. Now, the move higher follows a series of applications from traditional financial firms, including BlackRock. Just 2 weeks ago, the world's largest asset manager filed for a spot Bitcoin ETF, which would track Bitcoin's underlying market price. That move opened the door for other financial institutions like WisdomTree and Invesco to follow. So what do you think these developments mean for the Bitcoin network in terms of adoption and security? Do you believe this is the catalyst to make Bitcoin become a mainstream global financial asset?
I think it certainly could be. I mean, the Bitcoin space in general has had, a meme for the last several years of the institutions are coming. And, we've been denied of that many times in the past, but seeing names like BlackRock and Fidelity get involved is certainly a bastion of hope, if you will, that this is actually the time where crypto will crack through and we'll get to that new source of legitimacy that the space has so desperately been chasing for so long. There's been several different components of it this year. So one is the retail side, and there's been a lot of retail excitement in the Bitcoin space since the beginning of the year. We've seen new use cases like NFTs and also DeFi applications, again, for the first time kind of showing up on Bitcoin, which is particularly exciting. But then also on the institutional side, there's so much uncertainty in the macro right now that it's not a surprise that investors are looking for things with stable, predictable monetary policy like Bitcoin. So I do think we could be on the precipice of the real mainstream adoption the space has been looking for.
What do you think this sign of confidence in crypto from Wall Street means for the price of Bitcoin? Do you think this positive momentum will continue? What's your outlook for the price of the cryptocurrency?
Price in crypto is always a very difficult question. I think there's a lot of catalysts here that are very positive, but there's also, so many unknown unknowns right now when it comes to whether or not this will get approved, on what timeline, et cetera. So there's a lot of unknowns, trying to project out, but I do think it is exciting, and this could be the catalyst for, the real mainstream adoption and the Bitcoin run that people have been looking for a long time.
Taking a step back for a minute, you're a contributor at CoreDAO, a new blockchain powered by Bitcoin. What is the goal of this decentralized autonomous organization, and can it help with Bitcoin scalability at all?
That's a great question. So CoreDAO is trying to promote Bitcoin-powered blockchains like itself and others, based on Satoshi plus consensus. And the idea is that there's essentially hundreds of billions in latent assets in Bitcoin today that are underutilized. Digital gold is, of course, an amazing use case and has brought Bitcoin, where it is into the mainstream spotlight for the last 15 years or so. But there's so much more that can be done with these assets, whether it's, layers on top of Bitcoin like Stacks or CoreDAO itself. It's all about giving additional utility to these assets. And overall, that's what crypto is, trying to achieve. And it's certainly going to be exciting to watch that develop. In terms of the DAO, a decentralized autonomous organization, is a new type of structure that doesn't, have the traditional formation of a company. But the idea is that together you can help, use community governance to promulgate, positive change.
I understand there's a component that tries to leverage qualities of proof of stake with proof of work. Is that accurate?
That is correct.
And how does that work?
Yeah, so in the crypto space, there's been, kind of a religious war, if you will, between the different consensus mechanisms, since proof of stake became popular and really became into the mainstream with, the whole Ethereum 2 migration that, took place over the last few years. And the CoreDAO approach is quite different. It's actually saying that, hey, there's a lot of benefits to both of these. And if you slam the best parts of both together, you actually wind up with a 1 + 1 = 3 scenario. And that's really exciting. Instead of having to deal with, the trade-offs that have been traditionally viewed in launching an L1 blockchain, this approach was much more holistic and tried to take the best of all worlds. And that's quite a different approach. And with that kind of more inclusive design, the community has been very strong, and it's been, very optimistic signs thus far.
Now, I understand that you have an engineering background and that you led money movements engineering at Coinbase for 3 years. So I have to ask you about the latest news involving that crypto exchange. This month, the SEC charged Coinbase for allegedly operating as an unregistered securities exchange broker and clearing agency. What was your reaction to that, and what do you think the implications are for the industry as a whole?
So it's really difficult to comment on regulatory policy in the United States or, with the rest of the world. What I would say is Coinbase, like, most other players, I would assume, are really just looking for regulatory clarity and a path forward. And I think it's really exciting to see institutional players like BlackRock get involved, which are helping to legitimize the space. I don't think it's coincidental that Charles Schwab and others have, Citadel have put forth, applications for their own exchanges. And I think overall it's, very exciting. We'll get through the regulatory, hiccups in the US, just a time thing.
So on a general note, how does the heightened crackdown on crypto companies here in the US affect plans to build in this space?
So it's always challenging, again, to kind of, with this regulation by enforcement that we've seen from the US and from others. What I would say is that bear markets are for building. And I think that the real builders, emerge in these bear markets and will continue to build amazing products and amazing companies in the crypto space. And I think it's as exciting of a time as ever with each new difficulty that crypto has faced over, its 15-year history. There's always opportunities to, build bigger and better things. And I think, we're firmly in one of those periods right now.
What are you paying attention to right now?
Paying attention to so many things, it's difficult to give the brief synopsis. But what I would say is very excited about these, DeFi or further, utility enabling applications on top of Bitcoin. I think there's so much excitement in crypto overall. And for the last, several years, there's been a lack of excitement in the Bitcoin space. And I think we're seeing that shift in Bitcoin being, the flag bearer of crypto in general. It's really exciting to see that excitement come back. because there's just so much opportunity here with 650 or so in latent 650 billion in latent value on Bitcoin today. And that's something I've been watching closely. When we saw, the NFT craze hit Bitcoin earlier this year, it was hundreds of millions in economic value. Some of these tokens have traded hundreds of millions. So there really is a ton of activity, and different players like CoreDAO are trying to find the best path forward to enable, these new use cases.
I want to discuss the blockchain trilemma, which refers to the belief that decentralized networks can only provide 2 of 3 benefits at the same time with respect to decentralization, security, and scalability. How can the trilemma be resolved? What do you think is the solution there? And is this something you're focused on right now?
So this is something that CoreDAO is focused on, and it's a difficult question to answer. And what we would say is that if you look at crypto over the last several years, there's been trade-offs made in relation to the trilemma. The preeminent one that's been traded off has been decentralization in favor of scalability, and we've seen that particularly since like the 2017 cycle. And that's not really a great trade-off when you think about the ethos of crypto, right? The ethos of crypto is helping to create these uncensorable, unseizable, hard money assets or use cases that are truly freedom-preserving technologies. And if you lose that decentralization, you get closer and closer towards looking like a database. And when CoreDAO was being designed, that was really important, and it's part of the Satoshi Plus consensus. That's why there was this, bringing together of these different consensus mechanisms to enable, a more optimal balance of this scalability, security, and decentralization. So it's super important, and watching that in the space, we'll continue to see how that evolves. But trading off decentralization is always a bad call.
Okay, that's all for Crypto World today, but we will be back again tomorrow. So we'll see you then.